Moving to a new house right now means paying more every single month for the exact same lifestyle that you had before. That's why nobody is actually selling, but builders are cutting prices for the third month in a row now. The freeze is cracking, and what comes next follows a very specific sequence that has played out before. Check this out, and let's learn from the past.
The housing market didn't crash. It did something nobody predicted, and in some ways, it's worse. It's split in half. Half the country watching their home value fall. The other half, in bidding wars. Same mortgage rates, same economy, two completely different markets inside one country. And 4 days ago, the American Enterprise Institute published the number that tells you how long this lasts. 3 years. National home prices going negative for the first time since the Great Recession, down 1% by year end, down 2% in 2027, down 2 more in 2028. Not a crash, a slow grind. And depending on where you live, it's either already started or it hasn't touched you yet. Florida is the canary. 3 forces hitting it at once that nobody's connecting, and what's happening there right now is a preview of what could spread. By the end of this video, you'll know which side of the fracture you're on, what would need to change for this to reverse, and how to find out whether the wave has reached your zip code. 28 of America's 53 largest metros posted price declines through February. All of Florida, all of California, all of Texas. Cape Coral down 9.6%, Austin still falling, Tampa falling, Phoenix falling. Nearly half of all Florida listings have taken a price cut. Over a third of sellers statewide are pulling their homes off the market entirely because they can't get what they need. Meanwhile, Kansas City is up 8.6%, Pittsburgh up 5.8%, Cleveland up 5.9%, Grand Rapids up 5.1%, Milwaukee up 5.6%, Chicago up 4%. The entire Rust Belt, every market rising as a block. Fortune published a piece 4 days ago calling this the affordability economy. The markets that flew highest during the pandemic are the ones falling now, because at 6.5% mortgage rates, those pandemic prices are mathematically unaffordable. The markets that were too boring to attract the remote work migration, they never got expensive enough to break. Now, they're the hottest housing markets in the country precisely because they're affordable. Nick Gurley at Reventure App said this bifurcation isn't temporary. It persists for years as reverse pandemic migration moves people back toward affordability. The split is structural, not cyclical. The conditions that caused it haven't changed, and nothing on the horizon changes them. That's the fracture. Now here's the canary. Florida is getting hit by 3 forces simultaneously. Force 1, prices falling across every metro, not stabilizing, falling. Cape Coral projected to decline further through year end. Jacksonville condo prices down 6.6%, Tampa down 4.9%, Fort Lauderdale down 4.2%. Housing Wire confirmed a 43.6% price cut rate statewide, meaning nearly half of all listed homes in Florida have had the asking price reduced. A 34% withdrawal rate. Sellers pulling listings because the market won't give them what they need.
Hey, quick break. If you've got a mortgage right now and you're feeling the squeeze, the Mortgage Master Bundle, actually, that I put together, shows you how to start cutting your monthly payment immediately and how to navigate the frozen market if you're stuck. All right. It also helps people that have never gotten a mortgage or have gotten many mortgages before how to save thousands of dollars getting your next mortgage or refinance. Take a look, links down below. Now let's go back to the video.
Those aren't soft numbers. Force 2, and this is the one almost nobody outside Florida understands. In June 2021, the Surfside condo building collapsed. Florida responded with Senate Bill 4D, requiring every condo association to complete mandatory structural inspections and fully fund their reserves. The bill is coming due right now. Tampa HOA fees up 17% year over year. Orlando up 16.7%. Fort Lauderdale up 16.2%. Miami medium condo HOA, $835 a month. Buildings with no amenities hitting $1,000 a month. The mortgage is fixed. The HOA is not. Retirees who paid off their condos decades ago are being forced to sell because the monthly fee doubled and they're on a fixed income. Force 3, foreclosures. Florida is the third worst foreclosure rate in the country. Lakeland has the worst metro rate nationally. 3,250 new foreclosure starts in February alone. Filings climbing every month. Nationally, 12 consecutive months of rising foreclosures. February, 38,840 properties with filings, up 20% year over year. Adam's CEO Rob Barber called it gradual normalization. It means the pandemic era freeze on foreclosures has expired. The buffer is gone. The accelerant is a recession. Moody's has U.S. recession probability at 49%. Every input feeding recession probability is already in the system. The homeowner locked in at 3% can absorb a lot. But the armor has one gap: income. The one thing that cannot absorb is losing the paycheck. A recession converts a portion of the locked-in population into forced sellers. That supply hitting a market already declining, that's the escalation. The NEI published their projection 4 days ago. Nationally, negative in April, down 1% by end of 2026, down 2 in 2027, down 2 more in 2028. 3 consecutive years of national home price decline, the first time that's happened since the Great Recession. The national average is being held up by the Rust Belt appreciating while the Sun Belt falls. The national headline is meaningless to you. What matters is your metro, your zip code, your specific market. The information that tells you where you stand is public and free. So what would need to change for this to reverse? Mortgage rates need to fall significantly, not to 6%, to something close to 5 or below. Or incomes need to rise dramatically, 56% above current levels. That's not happening in any realistic time frame. Or prices need to fall far enough to meet buyers where they actually are. That's what AEI is projecting, a multi-year correction, not a crash, a grind. If you're in the Sun Belt, the peak pricing window has closed. If you're staying, you haven't lost anything real unless you're forced to sell. The freeze broke along a geographic line. The Sun Belt is correcting. The Rust Belt is rising. The direction yours is heading is something you can find out right now. Look it up this week. The freeze is over. What came out of it is 2 markets moving in opposite directions, and the answer is in your zip code.